We got a great episode for you guys here today. I brought my friend and partner here, Chris Kline. We've been working together on helping our clients really maximize their retirement savings, but not just putting straight cash into retirement. A lot of my clients are very interested in precious metals, gold, and most importantly, Bitcoin. So I'm excited to bring Chris Kline back on to Taxes Made Simple. Welcome on.
Hey, it's so good to see you. I think I was putting together, I think this is like our fourth or fifth event together since Miami, the coaching calls.
Yeah.
I got to tell you, your community, not only does it stand for something amazing, but having experienced the room in Miami, and it was a couple hundred folks, amazing people. Like you not only have an amazing purpose, but you have an amazing group of people, and meeting some of the folks that I think you have like 5 years now, 5 or 6 year people that have been with you.
Yeah.
That's just like, and they're just so cool. I mean, I've done a lot of those over the years, and I can't wait to do the next one. Like, I'm really excited to see everybody.
Thank you. You crushed it at our event. What did you think? I mean, we had a pretty awesome crowd. How'd you feel?
I was actually nervous. I think I told you that backstage. Like, I'm used to, I go on like CNBC, Bloomberg, you're in front of millions of people, but you don't see any of them. And being on the stage and having the room right there, like, you got to let the jokes drop and you got to let the content like soak in.
Yes.
And you're looking for, are they enjoying this? Is this enjoyable to them? And you get that real-time interaction. So, but you're like so welcoming, some of the coolest people. You know what I noticed that I really liked was it was really heavy husbands and wives or spouses and partners.
Yes.
And it's a team effort, and you hit that home on a lot of your messaging, and it shows. And they are, so many different dynamics. You talk to a couple, and sometimes it's like, the wife is like, you could tell she is the boss of what they're doing and so amped about it. And he's like, I just like saving money. And then it's flipped the other way, right? It's really cool. They're just really cool people.
I love that. Listen, we have a big group of people that wanted to get into real estate with their partners because of the whole real estate professional status.
Yep.
And believe it or not, this actually opened up some additional tax benefits for a lot of our clients to get into some self-directed IRAs and self-directed investing. So I'm excited to jump into a little bit of that. But before we do so, tell everybody who Bitcoin IRA is and how you and your partners came to build the company.
Yeah, absolutely. So I'm Chris Kline, co-founder, along with Camille and Johannes of Bitcoin IRA. We had been in the self-directed IRA space for a few years in precious metals, real estate, private equity, land, etc. And the challenge came across our desk, hey, could Bitcoin be included in this bundle of goods that's eligible here? Right. And in 2015, we built it. 16, we launched it. And put the first time ever Bitcoin was put inside of a retirement plan about now 10, 11 years ago. And we've built since, I think just over 200,000 users and about 12 billion in assets under custody, serving not just crypto, but also all kinds of other groups, real estate groups, a lot of the same folks in your audience. It fits. I was thinking after leaving Miami, and the coaching call was like, man, we're like two peas in a pod. You bring the first year, I bring the second and the third year, and really the wrapper that makes that generational wealth. And it just works so perfectly. So I'm excited to dive into that with you for your audience today.
Yeah. I mean, well, first off, to get to 200,000 users, I know that took a lot of hard work. So congratulations on you and your team on building a great business. I mean, I have barely 2,000 clients, so 200,000 users, I can't even begin to imagine. But maybe you can share with us the type of users that join your type of platform. Are these people that are just getting started in Bitcoin? Are these people that have been in Bitcoin since the very beginning and are looking to continue to expand their Bitcoin portfolio? Who's the ideal person to go to a company like Bitcoin IRA?
Early on, I called them the engine nerds. They were retirees or workers at NASA, Intel, all the kind of like Palo Alto Tech Valley group. Like they were into crypto early and then said, whoa, I can use a tax advantage account for this. And especially the early adopters, like you're thinking these guys are buying at like $100, $200 of Bitcoin. And they're still strong believers even at the levels that we're at today and where we're headed. And so that was the first group. Then it really started to evolve as we become more mainstream, as it became more part, just being like a ticker on CNBC. And the fact that it's a conversation in clarity in the White House and all the other things happening today, that now you see more folks saying, okay, I see that Bitcoin will be a piece of the future, and it's already being used in places, geopolitically and otherwise right now.
Right.
And I think this is something I want to put a little bit of my long-term retirement savings into, or build a component of alternatives around my retirement that I can supplement what I have. So that's the mentality.
Yeah.
There's really it's not a one size fits all, but there's no limitation. We have folks that are just getting started and saying, hey, I've never done a Roth or traditional contribution, to folks that are doing the solo Ks, which we'll talk about probably a little bit about that, and how that fits in, or they've rolled over old 401ks from past employers. It's kind of a full spectrum of what clients we can service and how that helps them build. Folks that started at the beginning with us with 5,000 are now almost seven figures, or have nearly touched seven figures in all-time high moments from that just small contribution for the year. And Bitcoin's got a lot of upside. People see it's finite. That's a big thing. So it's really is for everyone. I've seen such a range with this one, which is great. And that's what I saw with your community, was that there's a range there too. Everybody needs tax savings. Everybody needs the right container to elongate that tax savings over years of tax advantage investing.
Yeah, listen, I'm a big component of having frameworks for people to operate within. When it comes to taxes, I try to teach a framework around how you can structure your entities, how you can structure income shifting strategies, depreciation related strategies, and then retirement related strategies. I created a framework for it. But when it comes to investing money, I feel like a lot of people just get started with investing without a particular framework. They just adopt dollar cost average. At least that's what I see. What is kind of your investing philosophy when it comes to approaching digital currency versus traditional investments like stocks, bonds, and real estate?
For most folks that I work with in the retirement crossroads, I always sit at that nice crossroads between retirement and crypto. Their mentality is decades. This is their most folks think with their retirement is like, oh, that's something I'm going to set, and in 2 or 3 decades I'll need it. Yeah. And historically, it used to be like the pension era was you were just a saver. You didn't have to be a plan creator, a financial advisor, and a guru. You just saved. You put your match in, you got the company match into it, and you aggregated. That shifted to 401ks without most folks realizing it, that now, I'm responsible for building a strategy inside of my 401k or my retirement account. It just doesn't grow naturally. And so I think that's a big piece, is you have to be active with it, but that doesn't mean you have to be a day trader. You got to get your positions in order, DCA in and out, dollar cost averaging always, because it takes the emotion out of it, but you've got to get yourself structured in the place that you want and make those choices. Yeah. You see a lot of folks, they go after what I think are deemed the blue chips. Bitcoin is predominantly a big piece of our 12 billion. It's a lot of folks, that's where they stay. And then they'll play in the other stuff. And we have these cool crypto bundles and things that we just launched that I'll tell you about in a bit. And that's the kind of the strategy go into it. And it's really, I'm building this. I think this is something it's finite and it's going to grow over time. And now I can just simply watch it grow in a tax deferred setting, which is beautiful.
Absolutely. And that's the biggest part, is growing it in a tax deferred setting. So let's talk a little bit more about how people can actually get money working for them in a tax deferred setting, whether it's crypto or not. Talk to us a little bit about the benefits of the Roth. Do you see a lot of your customers coming in with tons of money already in the Roth, or they're trying to grow their Roth? For a lot of my clients, they're disqualified from being able to contribute to the Roth. So I want to talk a little bit more about that.
Yeah, absolutely. Yeah, if you get over a certain amount of income, the Roth goes out the door directly. But there are ways and strategies to get it over time as your strategy fits. And usually we'll do Roth conversions. Let's end with those. Let's start with basic trad versus Roth, so just everybody knows. So a traditional IRA account will be a lower of your taxable income. So if you do your 7,500, 8,600 for this tax year, you're lowering that, and then that now is in what's a tax deferred state. You can buy and sell assets at profits, you can make interest, you can make yield, and you'll have no taxable event for any of those transactions. So you're now deferred until you get to distribution, which is when we hit our 70s and 80s, where we're not making a lot of money, so our tax bracket is much lower, right? Yes. And that's the design of it. So you get to grow and play and never have to ante up a capital gains tax. Roth is the same in the middle. So you still get to play and have a lot of fun. When you bring the money in, you don't get that benefit right now. So you're not going to lower your 8,600 your bill by 8,600 or your taxable income by 8,600. Right. Instead, when you take distributions at 70/80, you'll have zero tax. It's tax-free distributions. So that's kind of the core differences is money in, money out. But in the middle, you get all the same glitz and glamour.
Yep.
And folks will do traditionals because you can keep stacking those in, and then over time they'll do what's known as a Roth conversion. They'll take a chunk of it and say, this year I want to move this over to a Roth, pay the taxes in that moment. Typically we see that in downturns in markets. So right now you'll see a lot of conversions because Bitcoin was 126,000 versus at 75 today. Right. The delta there, they're going to save a lot on that tax if they do that conversion right now with that asset at that value. So that's a popular thing that you see. And the way you do that is it's commonly known as a backdoor Roth. And really, you're moving traditional funds in, and then you're just slowly doing Roth conversions that fit your tax strategy. If you have, say, $100,000 in your traditional, and you know this better than I do as a tax strategist, you may not want to do the whole 100,000 as a conversion in 1 year, especially if it's going to jump your brackets and do all kinds of crazy things. So most folks work with their advisors and their strategists and say, okay, what makes sense this year that I can do a conversion on? And it won't affect my overall, won't break my entire income strategy and my tax strategy.
I really like that that you said that. One question I have for you is when people are looking to do a traditional to a Roth backdoor conversion, they're making a non-deductible contribution to their traditional IRA, which allows for them to then convert it into a Roth where they'll pay taxes on the contribution that they originally made into the traditional IRA. But is there a time period on when they have to switch from a traditional IRA and then convert it into a backdoor IRA? Or can that be a same day type of thing or a same week type of transaction?
That's everybody's case is a little different, but I believe from what I've seen, most folks try to time it. I've seen people do it instantly, so I know that it's eligible. Okay. Most people will hold it there for a little bit. It just depends on if they are I want to open it and I want to change it right now and I want to do all that right now, they can do that, or they can do it over time. Some folks try to do it to maximize the strategy of hey, my assets are going to go up and down. And there'll be good times, and also if they're setting up and they're trying to tuck a lot of money away, some like you see with the folks that do the short-term rentals, they're going to go for that depreciation number one and maximize that, right? That's the structure that you preach, and it's amazing. For this, they may need to be just tucking money away and lowering that taxable income as much as they can, and then get the Roths later. There's a lot of ways to skin the cat at the end of the day, what fits best for you. That's the beauty of this. So all of this is in a self-directed IRA, which means you have self-directed control of the investment strategy. So whether it's real estate, crypto, Bitcoin, Airbnb, short-term, whatever you're interested in, and you have the control factor of sorry, I totally lost my train of thought there. That's my bad.
You said the self-directed IRA is what gives
you're in control of the investments and all the moving parts. When I take distribution, when I do conversions, you have the ability to do these types of things. When you're in a traditional house, normally you just open a traditional or Roth. You have none of these SEPs, simples, solo K, additional things, all the extra stuff. It's a really powerful place where you can get access to the things that most people are really interested in right now. The stocks and bonds, mutual funds are one thing, but you can see the energy in your room in Miami. Rolling your sleeves up and doing those 100 hours you got to do with the SRT to make sure that you're qualified for it. All those things, that's an experience. Yeah. And they want that same experience when it comes to investing. So alternatives would become more and more popular of saying, hey, this is I want to do more of this with the money I have in my IRA. I don't want to go get a REIT. I want to go get another short-term rental, or I want to get Bitcoin and enjoy that marketplace. It's a pretty cool place to be. I've been in it for about 12, 13 years now. And the minute I walked into this industry, it's funny, I was 27, 28 years old, and I was like, what are you doing here, kid? And I'm like, I just think there's something cool here, and people aren't using it. 50% of Americans aren't using retirement strategies today, which is terrifying, yes. Because that's the one thing the government gives us, right? It's the one thing you don't really have to think much about and strategize. It's just, I'm going to put $7,000 away every year, and I'm going to build up with my max contribution. But there's cooler things you can do with it now.
Chris, I want to ask you a question that I feel like a lot of taxpayers struggle with, which is, should I be trying to put money into my 401k if I'm only making $70,000, $80,000, $90,000 a year? Let's just say, for example, maybe they're just cracking their first 100k. Or should they be focused on trying to put money into a Roth 401k and paying more tax? The reason I ask this is because many people that are sitting in that income range, let's just say between 60 to 120, they feel like they're paying a lot in taxes. But me and that's really not a lot of taxes that they're paying. But a majority of them understand that they're maybe working with an employer that could be matching a certain percentage of their 401k. They want to be able to get some of that free money. Should they be focused on a 401k or should they be focused on a Roth 401k? That's something that I feel like comes up all the time. And for many of these taxpayers, they struggle with the idea of whether or not they should be paying taxes or trying to avoid paying taxes to try to take home more money to hopefully increase their investing power.
Yeah, you know, the traditional is more popular for that reason. It's like, oh, I'm getting instant gratification. This year, I'm going to lower my tax bill. It's a long-term figure that says, but then I could really do some crazy stuff later with free tax growth, right? And that's, I think, you know, having not been, I'm not eligible, you're not eligible for the Roth, right? And I think the moment I crossed that threshold, I was like, man, that was bummer. You know, like you miss it because it's a nice little thing when you're thinking, now you're thinking longer term and you're like, okay, I'm not trying to necessarily lower tax bill with 7,000. I've got other tax strategies. I got structures, I got entities, I got other things for that. I would love to have it, you know. It's like I'd love to have the Roth right now. It's interesting the Maggi score, the limitation that's there. So some folks are like, hey, I want to take advantage of it as long as I can, and then have to do other strategies to get it later. But you know, for some folks, it's like, hey, I've got a $25,000 tax bill, and if I could knock a little chunk off of that, I take that right now. You know, especially, you know, when you get to that, there's those thresholds. You've preached. I've seen some of your content about this. It's like you get to the first threshold at like your first job, and you're like, okay, this is awesome. And your first check comes out, and you're like, what's all these numbers that are negative? What's that all about, right? and then you hit your next level where you start actually making more. Like you're getting in this zone, the 60s to 90s, folks, and you're like, oh man, I've okay, I feel comfortable. But in this country today, you don't really feel comfortable with inflation and with dollar currency debasement, rising costs. Now the oil thing. I mean, it's never-ending story for us. It's like, oh, everything's just getting more expensive, right? I mean, I use Monarch, and I've looked back at like the last 18 to 24 months just to see where things like in groceries or other places did a little analysis of like what was lifted. And it doesn't matter what the CPI says, you feel it. Everything is just more expensive. It's just and there's no magic bullet. Trump doesn't have it. Another president doesn't have it. There's no way to like say, hey, we fixed this. We've been making this mess for 2 decades, 3 decades, 4 decades, right? This isn't new. This isn't a new thing. And so I think that's like that empowerment is what gets them excited about it.
Yeah. You nailed it. I believe inflation is the hidden tax that most of us don't really put attention on, but we understand that we feel it. And for many people, I feel like their investing power has decreased. I feel like people are investing less and less because their groceries and their rent keeps rising. And for somebody that's trying to get ahead, how can they find a path to get ahead right now? What would you recommend that they do?
You know, I mean, this is true for everybody. Is like you got to have discipline. Just like, you know, you're better. You can tell you're better at this than I am. But you have gym discipline. You know, I got back into a good regimen with the new baby coming. I'm like, you know, I'm 41. I don't want to feel 80 when she's like 16, right? So it's like, so you start prioritizing. So I'm getting there. But you have like ultra discipline, right? Even when you're on vacation, you're running at the beach like a Navy SEAL. Like it's just who you are, right? You're built that way. But that takes the discipline to it, and you've got to first, you know, you got to get your numbers right. It doesn't matter if you make $1 million or make $100,000. Most folks will be, if they're honest with you, will say, hey, my numbers aren't as tight as they should be. I need to use tools out there. And with AI now, like when I just moved over to Monarch recently because I liked it better than the tracking and budgeting and planning that I was using, just because it gives you it gives you a lot more latitude and things that you can do. I'm not endorsing it in any way. I just enjoy it. Yeah. And using Claude to, you know, export all your transactions, do a double check, find things like that. It's an exercise that you can do really quickly and make yourself better and better. Yes. And so like that's step one. That's, I think. And then the next step is as you continue wherever level you're at, if you're at the 90 to 70, think about your contribution. Do that for yourself. That's at least a winning strategy. It's not the ultimate win, but it's a win. And then the next, it's like football. Okay, we get a first down. Now we're going to do this, and you're just taking it level by level. The next level is I'm starting to make some real money. I need to talk to a guy like Karlton. That should be your next, like, as you build. But you gotta just kind of right now. I mean, I'm like kind of a bootstraps American kind of guy. You just gotta. When times get tough, there's a great thing on Netflix right now about Americans, like our defining moments. It just hit like a couple days ago, and I watched one episode, and it really hits home at like Americans are built on adversity. We're good at this. So like whatever comes, we went through COVID, we went through 9/11, we went through stock comp, we've been through everything in our lifetime, and it's a short lifetime. It's only 41 years isn't that much. whatever comes, we'll get through it. But we've got to be disciplined and make those decisions. And even if it's a little bit, people are like, oh, I can't do $500 a month right now. But even just 50, 100, get yourself started somewhere, get off zero, get those dollars put aside, and it builds a habit. I think that's something you talk about a lot, is building a habit. So you have the habit of hustle hard, spend smart, and save with retirement in mind. There was no third one there for me. Retire restfully, I guess, or I don't know. But those are the three that you have to be thinking about. It's harder, right? Yeah. I saw this thing the other day, was like, as guys too. This was for dads, but it was like, and went through all the things that dad thinks about in a given day. And then it highlights that, like, that's the stuff that's you don't show. Like, we wake up every morning with those things on our mind. It's the nature of the beast. It doesn't stop.
And if you're an entrepreneur, you wake up with even more on your mind.
If you go to sleep.
Yeah, I don't even know. One of the things that I know entrepreneurs have at their disposal is the ability to set up a solo 401k. Mm-hmm. Talk to us a little bit more about the benefits of having a solo 401k through Bitcoin IRA. Is that something that can be managed through Bitcoin IRA if they wish to have digital assets inside of their solo 401k?
Yes, absolutely. That group is a great target for if you think about your room, the people that were in year 2, 3, 4. Yeah. This is where now they've built the businesses, right? They've got the SRT. They've got income coming from that. Ideally, they've taken the depreciation. They get into property. A lot of the things I was learning in Miami, they get into the property. They get the cash flow early. The whole setup. So now you've got money coming in. The business is profitable. The business you and your wife or your husband or your spouse run together that you've created with this strategy is now making money. And that's when you want that year that's happening. So if that's happening for you right now, you want to get a solo K built before the end of this year. Okay. And the best way to do it is just do it now. Get the solo K built. And as you have income on that business, you can do a contribution from two sides. As the employer, you can make a contribution to the solo K as a match. And as the employee, you can put into the solo K. And the total is like around 70,000 that you can, so for you, and then 70,000 for your spouse. So you're talking about 140,000 that can be put away in a traditional sense. So you're going to lower your taxable income by that amount as the business, because as individual and business, right? Yeah. And that's the tool that folks are using, because you get that big contribution limit. Yes. It's much more than 7,000. You're talking a lot more than $7,000 or $8,000, a bigger impact. Wow. What's also cool about the solo Ks, once you're in them, you can do a few cool things. You have Roth and traditional, so you have easy conversions for Roths. It's built into the structure of the document of the solo K. You also have the ability to take out loans or loan to yourself from that. So let's say you put the 50,000 in, and you're like, now there's a property that pops up, another SRT, and so you don't know, do I want to put this property in through principal in my retirement, or do I want to do it outside of that because it's short-term cash, it's a quick deal or whatever? You can take a loan against it to yourself. You pay a nominal interest rate, and now you can use those funds for outside investments to continue that first layer strategy. Wow. So this really fits for folks that have gotten to that level, and now they're making money, and it's like, okay, I want to save more. What can I do? And usually, if you do it right, like you were showing some of those folks, that one guy that stood up, great story, was like, I think he said it was like 35,000 he's making on a monthly on his he's got like 3 or 4 now Airbnbs. He's got one that's making like that. And that's when you're like, okay, we did this right. We structured it right. We got the savings for depreciation. We're making money. We're successful business owners. What do we do next? Well, you can take salaries, you can take distributions, correct, which is okay, but now you've got taxable moments in your life. Or you can take a big chunk of it and put it into this. And now you've lowered taxable exposure, and you're now in a beautiful tax deferred setting. You can trade all day, do those things, no taxable implications. And if you do the Roth conversion over time, now you're taking it out on tax-free distributions. And that's the playbook that you kind of earn from the discipline to the structure to now I've had success and I'm going to make generational wealth here. I'm going to build this thing out so that there's a lot of funds put away in tax advantage ways for my next of kin, my kids, my grandkids, those types of folks.
You just hit it right there, Chris. Okay, let's unpack this. So first thing I want to make sure you guys are aware of is we teach a lot about the short-term rental strategy on my channel, primarily because a lot of the taxpayers that I work with are successful doctors, surgeons, and physicians. And then everybody else seems to be business owners. So we get a lot of high net worth individuals that are coming in with 3, 4, 500K, sometimes more than that, W-2 or 1099, and they're doctors, surgeons, and physicians. So they're working 40, 50 hours a week. And then we get self-employed business owners, typically doing anywhere from $1 million upwards to about $100 million. So we have a wide spread on the business owner side, but everybody comes in the same. I am busy. How do I offset my taxes? And I want to invest more money. The real estate strategy that we utilize is the short-term rental strategy if the taxpayer doesn't have the ability to qualify as a real estate professional, or they don't have a spouse that can qualify as a real estate professional. So spending 100 hours managing your own short-term rental and making sure that your tenants are staying in the property 7 days or less gives you the ability to unlock the rental property to be an active rental, so you can get depreciation to offset your W-2, even your 1099 income. The beautiful part about this is if you're managing your own investment property in order to execute this strategy, why not set up an LLC management company? And then now you or your spouse can place themselves on payroll, take a reasonable compensation for managing the investment properties. And now we have the ability to play into the strategy that Chris just said here, where we can set up a solo K underneath that management company and have your spouse, yourself contribute to a retirement account. And hopefully we're doing it the right way, where we're putting some money away into the Roth 401k version of that, so we can have some tax-free growth.
Yep, absolutely. It's like I said, two peas in a pod. You get there, and now you've got this beautiful package. That's like, okay, that makes sense. That's what I did this for, was
Yes.
to have my hustle hard and have the results. And now I want to keep as many of them as possible. I think everybody in the room in Miami, I said, agreed, was like, I don't mind that I have to pay taxes. Nobody's mad. I just like the ratio of my success to be a little bit higher than the government's.
Yes.
So it doesn't have to be dollar for dollar. You know,
That's
like
a good one right there.
that's the goal.
Ratio of my success to be higher than the government's. Wow.
That's only fair. You know, California, you're soon to be a refugee. I'm a refugee of Los Angeles. Yeah. And you know, if in some years, if you don't do the right, you could be at 52, 53 cents on the dollar.
It's insane. It's insane. How have you liked being no longer a California resident? What has that done to help you and your family grow? And what would you say to other members that are watching this right now that are considering making a move change, not only for lifestyle reasons, but for financial reasons? Yeah,
you know, for me, taxes was just a small piece of it. Even though it's a big bill, it was only a piece of it. Yeah. When the fires happened last year, we actually, the air was so bad, Izzy's got really like sensitive skin and allergies. We didn't have power for like a week and a half because a transformer burned down in our area. Like it wasn't fun. And for me, it was like the first couple of days I had my like wine radio, and I'm a Boy Scout. So I was like, we could do this. Just don't open the fridge. We got water. We got everything that we need. And then like 2 days in, I was like, okay, this is not camping, Boy Scouts. My wife and daughter are pissed. So I got to change this. So I had a podcast out here in Scottsdale with another guy, and so I was like, hey, I have to head out there. Why don't we just go out and get an Airbnb for a couple of weeks? And then do our and get away from all this. And we kind of fell in love with the city. It was, you know, you when you take yourself out of it, it's like a frog in boiling water, right? When you take yourself out of Los Angeles, you're like, wow, there's no graffiti, there's no homeless people, I don't have to worry about home invasions. My traffic is so much better. Like there's the world, and then there's the rest of the world, right? Yes. And you know, it's been a good transition. I think there's always bumps in the road. Any transition has a bump in the road. Like nothing's perfect, especially you got a 11, 12-year-old daughter. She's coming to age and has her friends, and you know, those types of things. But I think it's great. I mean, the weather's beautiful. We're actually planning, because it does get hot here. So you like, yes, what people do is with some of that savings, they'll take another trip or do something. And we're doing, because we do still like California for like the beaches, right? You're near one. Yep. I was thinking to do like 3 or 4 weeks of 3 or 4 different Airbnbs, starting like Carpinteria and end in San Diego, and then just come back and just coast, spread it out, and just, you know, a little Hermosa, a little Newport, a little you know, Carlsbad, or like San Clemente, and then end in San Diego, and just like take a few. And just have a nice little like 4 or 5, like a month, get away from the heat. And people do that everywhere else too. So, you know, South Dakota is a great place to live for taxes. It's 0%, right? But I've been to South Dakota in the winter. It's not that much fun. It's not. So you know where they come? They come to Arizona. That's where they come down here in the Florida. So
yes.
So
yeah,
you know,
I think South Dakota, it was not a lot going on there. And all respect to people that live there, but I just personally didn't.
I get it that when the way we grew up in this country was the coast, California, New York, those were the epicenters. Yes. So if you were ready to play with the big boys or girls, you went to the epicenters. You went to DC, you went to these places. So that's how I left from Colorado and ended up in Los Angeles. Like, all right, I want to do more I need to be somewhere where the action's happening. Since COVID, that's not the case. Right? We have 200 employees. They're all over the country.
Yep.
Nobody has to be in a certain location, and they can earn off of their talent, not their location. So the flexibility is amazing, right? And I think I have two of my partners are in Nashville, outside of Nashville now. Love it. Enjoy, and I just was there and visited with them. That's all. Yeah. That's a beautiful place. South of Nashville is really cool, building, growing. Nashville is a cool place. Nice, easy airport. Does have international flights. You're looking at Florida. There's a lot of. I mean, Florida's like its own country, so you got all kinds of options there. It's got like 8 professional. Or it's got like 8 of the best college football teams also. So you're all set for that.
I love Florida just because it reminds me a little bit of California, except more palm trees, a little bit more unpredictable weather, but the water's a lot better, if you ask me.
Oh yeah, I don't get it. I like if we do this road trip, I've never gotten in the water in California. I think when I get in the water, it's like Hawaii or somewhere else.
Yeah, like Cabo, Hawaii has much more better.
Cabo, some parts of Cabo you really can't either. It's because it's right there on the edge. Dangerous. It's pretty rough water. It's dangerous in some parts of Cabo. You're right.
Yeah. To circle back on the investment philosophy that we were talking about earlier, I wanted to hear from you. For some of my members that are over in my private equity community allocation room, they have an investment philosophy around how much exposure they want to the private markets. I would say some of them have 10%, some 20%, some of them only 5%, right? When it comes to Bitcoin, where do you think that falls in a traditional investment portfolio? Do you think it sits as a 5% of your entire investment portfolio? Should only really be 1%? I know for someone like you who's been there, who has been a big believer in Bitcoin and has been able to experience a lot of gain out of that asset class, it might be a little bit different for you. You might have a bigger bias towards it. But for the average investor who's looking for sustained growth, and maybe they're in their early 30s, or early 40s, they know that there's a big gap between where they want to be in retirement and where they are today. How should they be approaching their investment portfolio?
Hey, there's some groups like Fidelity's issued guidance that started at 1% a few years ago. It's raised, I think, to 5% now.
Fidelity.
And
okay.
I think, so they've increased it to that point. And they're probably the most Bitcoin bullish of the big traditionals. Kathy and everybody over there, the way that they run it, they're very forward thinking. There were groups like Vanguard that actually banned it. They were they didn't offer the ETF. They didn't want anything to do with it. And they've now had to reverse course because enough people said, hey, this is something we want. I've seen the range in somewhere between 5 to 25. You're right. I obviously have a bias. And also for anybody that got in and that gets in at lower prices and they grow, all of a sudden your allocation shifts. If you put 50,000 in and the price gets back to 125,000, now you have 100,000. Yes. So you have more than you anticipate. So, and people they'll DCA in and out, but it's really a win and out in doubt, zoom out mentality. And that's why it fits so perfectly with retirement, because you're not taking money off the dining room table or the kitchen, the cupboards. You're not taking emergency savings. You're not taking you're taking something that you're going to need in 2 or 3 decades, and you get to enjoy this realization that there's a difference between infinite and finite that hasn't hit yet. That's people that really love Bitcoin. The reason why we love it is there's only so many that will exist, and nobody controls that production. There's not some guy or group of guys at the Federal Reserve in New York deciding what we're going to do every 3 or 4 weeks, and we all have to react because they have minutes. And the whole process of the guy comes out, and now there's Kalshi bets on whether he's going to say hello or good afternoon. It's crazy. The world has gone crazy around a bunch of guys sitting in a room deciding what money is going to be about, and this is consensus driven. So that people like that global look at it. It's like there's no control factor, and the limit, the finite is 21 million Bitcoin will only ever exist. You and I won't see the last ones get mined. It took all of 13, 14 years to get 19.5 million created. It'll take another 100 years to get to the last one. Mm-hmm. So our kids will see if maybe. They're gonna have to live pretty good long lives, but who knows? These kids nowadays, who knows how long they'll live?
Technology allows for it.
With the technology and everything that they have, so that's what really gets, I think, what people think about, and we haven't seen that happen yet. We don't have this concept of scarcity or supply shock yet. But when you realize that it's there's only so many being made and so much more demand, and the demand is growing not just from guys like you and I and folks that are doing retirements and building up those things, institutions, nation states. Entire investment groups, strategy, businesses. This is much bigger than it was even 4 years ago. And there's some interesting stuff coming. I think that this year we're going to get the Clarity Act. We're going to get probably a new head of the Fed. We have a midterm election, so that's interesting. AI is having its impact on jobs. So there's stagflation's become a big conversation. So high prices, low growth, high unemployment. The last thing we need is high unemployment. We have inflation is where it's kind of underestimated and it's hitting in certain places. Growth is Q4 numbers came out. We don't have the natural GDP growth we need. So the next thing is if enough AI, like you Oracle, Jack Dorsey's group, like 3 or 4 groups have now laid off about 100, 125 people. And then their stocks soar because it's a replacement. They're replacing humans with, which is the most expensive part of a business, with data centers, basically, and agentics and things like that. And that's going to keep going. I don't know about you, but I live with this stuff now. 100%. Last night I was showing Izzy something with it for her school stuff, and it blew her mind. She was like, because with her, she had to write, she's doing a science experiment, and she has to do the science fair. So, you know, the little trifold and all that, she's doing all that. And she can tell you, she's like me, she could spend 20 minutes telling you all about the experiment, what she did, this, that, and the other thing. But when she gets the questions to write down for the prompt to build her pieces of she freezes. She's like, because she likes to talk and think, not write and think. So I'm like, all right, let's just sit down. I grab the questions. I did a recording. I recorded an interview with her. I put it through Otter, dropped it in Claude, said, hey, Claude, this is the conversation with me and my daughter. Here's the questions she has to answer. Help us construct drafts as responses. Puts them together, print it out. She goes back and handwrites everything into the pamphlet. That's her using the machine to make her brain more powerful, is how I look at it. So
I see nothing wrong with that, because AI is not going anywhere. We have to integrate it. And for many parents, I know they probably struggle with the idea of their children, you know, not learning in the traditional sense in the way in which they learned. But let's be honest, there's no sense in going backwards. I mean, the future has already presented itself to us. You might as well start getting your children pretty integrated with how to use the tools the right way. And more importantly, I would be more encouraged to see more curriculum that inspires students to go and look for answers with AI and to come back with the right type of, you know, descriptions or answers with AI.
It's really, they should be teaching these kids what they taught us when I was in kindergarten, was how to go to www. And now what they should teach them is how to prompt for what you need. Because it's really just comes down to prompting. I probably find myself, I call it going down the Claude hole sometimes, because you'll go 4 or 5 hours and be like, holy crap. You can create anything. You can create so much stuff. It's unreal. And it just comes down to communicating with it the right way. And, you know, she's seen that, my wife's seen it. And I think for big businesses and for individual, if I was a startup hustler right now, I would be living with this stuff. I wouldn't be thinking at all. I would just be taking a task of things that need to be done. This isn't a Google search. Tell me, make me this. It's a discourse. It's, hey, you think like this. This is what I'm thinking. Ask me questions. I'll give you answers. Let's go back and forth until we get to a sweet spot here. And then don't forget this conversation, because I'm going to come back for something else that's related to this later. And that's how you think about your structure.
That's the most important part, because you'll be so annoyed that you spend so much
start a new conversation. They're like,
it's not pulling.
Where do you work? And you're like, no, we're not back here. No. No, I think I've actually broken up with ChatGPT. I was gung ho last year on that. I think I'm done with that, and I don't Google anymore. It doesn't make sense. Like, I mean, sometimes it's something quick, like I need to find a place. But if I'm doing like planning out that trip with the Airbnbs, I went to Claude and was like, hey, here's what I'm thinking. It goes right into VRBO, Airbnb, all the sites, and finds everything. This is cool for your SRTP. If they're not using it, like I think one of your new future coaching calls should be AI and an SRT world.
Yes, because what the Claude can do is evaluate the deal and underwrite it for you.
Yep.
And that's
I saw yesterday a guy's got an open claw that is taking from the Google satellite, looks at the house, sees how a pool would look good on that house, and then sends it out as a postcard of this is what your backyard could look like. And it's just automatically finding houses that don't have pools in rich areas, and then direct mailing instantly and saying this, and that's how they're called. It's insane. There's so much cool stuff. It's going to change the world. Well, it already is. You either have to embrace it or not. That's why, you know, I joked with Isabella this morning. I was like, hey, that thing we printed out from Claude, you didn't put that in with your homework, right? And she's like, why? And I was like, you know, I remember teachers didn't like computers. They don't like calculators. I don't think they might not like this, but we're going to do this. Yeah, I know. I'd defend it. If the science teacher said, hey, what'd you do? I'll be like, this is what we did. Okay, that makes sense.
Yes. Oh my gosh. Speaking of defend, I didn't want to jump off this topic, but it just got back to me. The Strait of Hormuz, I saw that an article said that the Iranian officials only wanted to receive payment in crypto or Bitcoin. Can you talk a little bit about that? Was that true? I don't know if you've done any research on that or if that article got back to you. And what do you think about that? Where does that tell us that where the state of the nation is when it comes to currency? Why wouldn't they want US dollars? Why do they want crypto? Why do they want Bitcoin? Why do they want something that's a little bit harder to trace?
Yeah, well, you have to think from the perspective of Iran, right? So first, they've been at odds with us for 45 plus years, good, bad, or otherwise. Sometimes it was good, and then it wasn't great, and it's not really been so great since the hostages in the 70s and 80s, and it's just been kind of, and their geopolitical look is they're an Arab nation. There's always the Israel play. It's all about geopolitical control of things, and that the natural choke point was actually the canal that was built, the Suez Canal. Remember the boat that got stuck there a couple of years ago during the summer? Yes. And you're like, how did he get trapped there? That was not man-made, and that was the original choke point. But if you look at the geographics, the Strait of Hormuz is this tightening, which isn't difficult to control or militarize, right? That's what's happening. Is like you can have enough boats and navy that you can control who goes through that because it's not that much space. You can't do that with the Indian Ocean. You can't control it, but you control that little space. So that's what they see as a competitive advantage of their geopolitics. And so that's how they're trying to control ebbs and flows of oil and really the oil trade in their own way. Now, they also just recently, 2 months ago, their real collapsed in terms of US dollars. Like it literally, if you look at the chart, it went straight down. It looked like it's not recovered since. So its society has already said, okay, the real, I have no currency. So they were doing dollars, but you would see actually, if you look at the data of wallets opened on blockchain, like new wallets, and their location was concentrated there during that time. So the average Joe was like, hey, I need something. They didn't run to go get gold bars or things like that. They didn't go to get dollars because there's also the sanctions. There's been sanctions around this group forever. So bank accounts frozen, US dollars not being able to move, funds literally taken out of accounts. They've dealt with all those things. So it's the natural thing for them to say, okay, we want to get paid. We're a toll booth at the Strait of Hormuz now. So you got to drop your 20 cents in or scan your whatever. And do they want to wait for a wire transfer that could get pulled back by the U.S. government or in a sanction or something like that with international banks? Do they want to wait for some guy to come on a tugboat and bring $1 million worth of gold and silver bars? Or do they want an instant transaction? And that's what Bitcoin gives them. It gives that instant, immutable global transaction and that's the beauty of Bitcoin is it takes all those layers of bureaucracy out. Now, some would say, well, that's bad then. That's bad. That means criminals and terrorists and these groups can use this. You're right. It can be abused in that way, but there's so much more around it now that the tracking, the OFAC, the understanding wallets can be targeted as OFAC wallets, just like bank accounts can be targeted as OFAC bank accounts, right? That all exists now. It didn't exist 5-6 years ago, but now it exists. And this isn't the first time. Look at El Salvador, one of the most impoverished countries in Central America, is now becoming the shining city on the hill because it's embraced since 2020 or 21 in Bitcoin as a reserve currency. There's a direct investment. Google's made a building down there. 2 or 3 other big tech players have made buildings down there. Now they look like the crown jewel of Central America because they've embraced it. Argentina said no at that time because the World Bank said, if you do this, we're going to take away your free money. Yes. And so they didn't do it. Now they're thinking about doing it. Zimbabwe had it happen. Turkey had it happen. Whenever you see currency problems, shakiness, either political or economic, and that's usually intertwined with currency value, this is where people are headed. This is where they're jumping onto the bit. So mainstream adoption is telling you when things get tough, Bitcoin seems to be a plausible, verifiable, finite solution that's attracted to people. Not just people, but now countries that are trying to control oil flows.
Yeah. One of the things that I know happened recently is we saw a little uptick in the Bitcoin price. We climbed back up to 73, 74,000, I think almost 75,000. What is pushing Bitcoin slightly up right now? I mean, obviously, the next time we shoot a podcast could be back down, but what is happening right now?
I think all markets right now are in this, probably the max amount of uncertainty in my lifetime. Because we've seen layers of uncertainty over the last 40 years that I can speak to. And this is probably the place where most people are kind of like, this could go one way or the other, and every market's acting irrationally. We get a peace accord for 2 weeks, and gold soars. Let's go back 20 years, and it's supposed to be the other way. Turmoil is what gold runs on. Peace is where gold doesn't do as well. Like, it's because there's no fear or concern. That's not acting the same way. Silver went from 35 to 125, then pulled back all the way to like 75. It looks like a meme coin stock, really. Like, it's moving so much. Stocks are generally like, they're range bound, and crypto and Bitcoin itself are kind of sitting range bound. Because people are trying to figure out what is going to happen next, and it's not just what's the next tweet. This has now become like this is the peace accords. If you think about like Vietnam, the Paris talks that happened, they were having behind closed doors between Ho Chi Minh and the North Koreans or North Vietnamese, South Vietnamese, the U.S. and other parties, and that was like that was how things were. Now this is happening on Twitter. Like, Trump posts something, and the next day there's something coming out. Like, it's an open discourse, which that makes people uncomfortable, justifiably. Like, this isn't how these things that naturally have gone down, but this is the world that we live in today, and every day it's something new. I think we're going to see. This election is a big referendum of where we're going to head next in a lot of ways, because after this is what they call a lame duck presidency. If you kind of lose power of the government and you've got 2 years left on your second term, there's not a lot you can do. You're just trying to get to the finish line and get as much as you can. If we hold House or Senate, the Republicans hold House or Senate, that's a different narrative, and I think that's going to be a big thing. Plus, you have what happened in New York with Mandami. There are other races around the country, like even Los Angeles with the Spencer Pratt's competition. There's also another member of the city council that's leans very socialist. It's a crazy time to be alive. So anybody that will say with confidence this is going to happen next, I don't think, from all the way from CNBC to the guys, like, nobody's saying it. And if they are, I wouldn't, like, there's nobody knows. So diversification's huge. That's why you see, if you look at the charts right now, dollars held strong at 100, like in the USD index, because what people are sitting a lot on right now is cash. Rates haven't changed, so you can make a solid yield, and they're waiting to see an indicator. Those that are convinced of a product, like if they're already crypto folks or if they're already real estate folks, and that's their strategy, they're taking advantage of these prices, which is, that's what we all should be doing, because it's, you take the emotion out of it. You just decide, this is what I'm going to do. Diversification is going to be big for the next 12 to 18 months as we see some clarity through these things. And then there'll be, like always, every market, there's winners, there's losers, there's things that work, there's things that don't work, and time will tell. But we're sitting in that, just like, that when the teeter-tottering, just which way is this going to go? And nobody really knows. I'm on I did almost 65 media events last quarter. Closed out with you in Miami. I think I was like 65 was my keynote, and in our fireside. And nobody's really. I'm not going to walk around and be like, this is what's going to happen next. We just have to wait and see. Be Americans. Adversity is our friend, and we hustle hard. We spin smart and retire restfully.
That's right, man. Chris Kline, Bitcoin IRA. It's been a pleasure having you on here today. I'm excited that a lot of our members get to see you come back, and that we're going to be doing more of these podcasts more regularly, primarily so we can get members to understand how their dollars can have more than one job, but also keep up to date with the markets and what's going on in the Bitcoin space. Where can people get more information if they're looking to work with you guys?
Yeah, so you can obviously visit bitcoinira.com/Karlton. I think there's also /Tax Alchemy. So like you can go to any of those places. I know you share those links. Or you can call.
Those links down below for you guys.
You can also call directly, 877-936-7175. I've got folks that have been with me for over a decade that have helped tens of thousands of Americans get into this. So retirement's not one size fits all. So if you're in that layer one, folks, that just need to get a traditional or Roth started and save a little bit, that's your win. If you're now in the layer two, where you now have the business established and you're ready to go, then you can start getting that going this year for yourself. Get that solo K established, make those contributions. There's a product for everybody in every stage of their cycle, and that's why we put human beings on it. So you can talk to somebody. They'll sit on a Zoom like this and learn all about your strategy and let you know what's available in our world. And get you set up for success. I'm pretty pumped to be a part of this group. And is there another event coming up, by the way? I wasn't sure. I thought, is there?
Yeah, we'll have an event coming up in June. We'd love to have you there if you guys are available.
Absolutely. Is it Florida again? Miami again?
We're going to be in California. We'll be here in Newport Beach.
Oh, I gotta watch my days. No, but that's fine. That's perfect. Yeah, that's
No,
perfect. I can
it'd
actually
be
wedge
great.
that
It's
into my
actually more of
trip.
an
I could probably,
It's more intimate than our Miami event, so I would really love it if you can make it.
of course, not a problem, buddy. Count me in.
Sounds good. Guys, listen, it's been a pleasure having Chris on here today, and you guys will see more of him. For those of you guys that wanted to get any information, we're going to go ahead and place the links below this video. We'll see you on the next episode. Cheers, everybody.